Good morning, everyone, and thank you for joining us for the Arlington Economic Development Business Launch Series, Business Tools to Survive a Pandemic. We'll get started in just a few moments. Good morning, everyone. Thank you all for joining us and welcome to the second webinar in the Arlington Economic Development Biz Launch Series, Business Tools to Survive a Pandemic. I'm Kate Bates, President and CEO of the Arlington Chamber of Commerce. We are proud to be partners with Arlington Economic Development Biz Launch to bring you today's program. The Arlington Chamber and Arlington Economic Development are both hard at work to provide resources to our business community during this difficult time, and today's program is one example. 3 weeks since the first in this webinar series, and a lot has changed. The CARES Act, signed into law on March 27th, created a new small business program, the Paycheck Protection Program, and expanded uses for the existing Economic Injury Disaster Loan Program. Many of you have applied for these programs, and although banks and federal agencies have been hard at work to set up these programs, many businesses have remaining questions about eligibility, opportunities, and the process of how to apply and when funding will be available. Our goal today is to help provide answers for these questions. To do that, we are so pleased to be joined by Nick Rajpara, an Economic Development Specialist at the U.S. Small Business Administration's Washington Metropolitan Office. He will give us a brief presentation and then take questions from the audience. As he's speaking and during the Q&A portion of the program, you can enter your questions into the chat box and we will ask those questions of Nick during the Q&A program. So Nick, thank you so much for taking the time to join us today.
Great, it's my pleasure, Kate. And could everyone hear me at this moment?
Okay. We can.
Yeah, absolutely. Hey, folks, I want to thank you so much, Kate, and the good folks at BizLaunch, Tara, Alex. It's an absolute pleasure working with you. I miss you guys, seeing you guys in person, but I think this is a new normal that we're all adapting to. As Kate mentioned, things are changing very rapidly. I believe one of my colleagues, Dave Hincapie, did a presentation for you just a couple of weeks ago, and the program's information on a lot of these programs has changed from that time. And in fact, I'll just tell you, to be honest with you, this slide deck that I have submitted to you late last night, some information has changed in the course of the time I submitted this slide deck to the time of this presentation. I'm going to do my best to give you the most updated and current information. I'm going to also try my best to stay away from speculation, opinion, and conjecture, and just stick to the official public information that is currently out there. Our agency, as many folks don't know our agency. The good folks at BizLaunch do. We've been working with them for a very long period of time. But this is typically what our agency focuses on for small businesses. We help small businesses start, grow, expand, and recover. And if I was doing a presentation for Tara and her team under normal times, I would really be focusing on those first 3 points. This pandemic is unprecedented, and it has taken not just an unprecedented toll medically and on a public health scale, but also economically. Our small agency is front and center in leading the charge for the economic recovery for the nation. So many folks around the country are employed by small businesses, and we are tasked with carrying out programs at an unprecedented pace. There's a lot of content on my slides. I'm not going to read you every bullet point and every word on the slide. This is just a reference for you to follow along. It is important to know that this slide is just for this presentation. It is not an official communication of the SBA. It's really for internal use so people could follow along. The information will change. This is information that was most current at the time I developed it. If there's any information that has changed from the time of submission to the time of right now, I will make note of that during this webinar. Anyway, a brief time in history. It's just, I guess, just less than a month ago where the president declared a national emergency. And soon after, many states and U.S. territories followed, declaring their own statewide declarations. The reason why this is important, whenever the government entities at the federal and state level, they have a national declaration, it opens up certain powers and programs that the governments have to deal with these national emergencies. And I'm going to be highlighting some of those programs in the slide deck today. One of the things that's happened, which was in response to this nationwide pandemic, was the Coronavirus Aid, Relief, and Economic Security Act, which was just signed about 2 weeks ago. And since then, we've had many programs that have spawned off, and the new programs, as well as augmenting many of the existing programs that we had in place. The first one, I'm just going to touch on for this presentation. I'm going to touch on the most popular ones. And the first one that you've probably heard about in the media, if you've not experienced yourself, is the Paycheck Protection Program, PPP. We have a constantly updated website, which I've provided for the URL right there in the center of the slide there, SBA.gov/PPP. I encourage you to go to the website, not refer to the slide deck, for the most updated information. So it is very important because it will tell you everything you need to know about the Paycheck Protection Program. But let me just kind of give the audience a very high-level overview of the current Paycheck Protection Program. The most important thing to know is, well, just big picture, this is a popular program because this is before I go into the detail, this is a forgivable loan if you keep your employees. It's a very high level. It's important to know that this program is not a direct loan from the SBA. We're offering these loans through our lending partners. We started with our SBA lenders. We have relationships. SBA has relationships with lenders who make SBA guaranteed loans. Some of you may or may not know that the SBA does not primarily make direct loans to borrowers. Only in very niche cases is this is done. And one of those niche cases is disaster. So that's one of the few times that the SBA is a direct lender. But for most of our loans, we go through our preferred lender network, and they are referred to as SBA lenders. What SBA lenders do is they make the loan, and our agency guarantees these loans up to 85%, for 7A loans. That's the highest guarantee for, our current loan. It is a little different for the Paycheck Protection Program. What we want to do is we want to incentivize banks to make these loans. So the SBA is guaranteeing these loans up to 100%. There are no loan fees, as you can see, and the uniform loan terms and conditions. So it does not matter which bank or lender you go to get a PPP loan. The loan terms and conditions are uniform, irrespective of borrower. And this is not typically the case when you go to get an SBA 7A or 504 loan. the banks, they might evaluate you differently in their underwriting. They might give you different loan terms and conditions. We wanted to make it uniform because we wanted to make sure that people got as many of these loans as possible. Now, one of the things you may have heard is initially applicants were not getting these loans from their current financial institution, their current bank. Even though we were encouraging people to start there. As I mentioned, you do not have to go to your current bank. You could go to alternatives. You have alternatives. I listed a URL right there to find out your alternatives. We do want to talk about the terms and conditions of these loans. The loan amount is up to $10 million. The way the loan amount's determined, you would take your average monthly payroll cost. So whatever your payroll cost is for the average for the month. And this is not just your salaries for your employees, but this is any benefits you pay them, any health insurance, vacation time, even payroll costs associated with processing payroll. That would all factor into your monthly payroll cost. You average it out over 12 months. And what the lender would do is it would take that monthly average, multiply it by 2.5, and that would be your loan amount. Your loan amount is capped at $10 million. The interest rate is 1%. 100% of this loan is forgiven. This is a proper provision. 100% of the loan is forgiven, provided that you use 75% of the loan proceeds to cover payroll costs. That is the most important. If you reduce your payroll or whatnot, your forgivable loan amount is reduced as well in proportion. As I mentioned, no loan fees. There are other use of loan proceeds that are permissible. You could use some of the loan proceeds to pay current expenses such as rent, mortgage, interest on mortgage, utilities. But the key is not to use your loan proceeds, these loan proceeds for these other expenses more than 25%. Because remember, you want to stay within at least have 75% of your loan proceeds going towards payroll costs if you want the loan to be forgiven. No collateral requirements, no personal guarantees. Another unique feature of this program, you would not get that typically in your other programs. The maturity is short, 2 years. We're deferring the first payment for the first 6 months, and of course, there's no prepayment penalty. Again, reiterating some of the information, we were initially encouraging folks to start with their bank, their current lending institution. Many folks were capped, getting a response saying their current lenders are not offering it. So we created a nice tool to find alternative lenders who are participating. The URL is right there in the center of the page where you could go in and search for alternative lenders by zip code. It's a nice little Yelp tool that we created. And we were also rapidly adding new lenders that are not SBA lenders who could offer a PPP. We have an expedited process for them to offer a PPP. So we wanted to make this as widely available as possible. The Economic Injury Disaster Loan. Now this program was in existence before the CARES Act. It was augmented, enhanced by the CARES Act. Now, before I go into the nuts and bolts of this, let me tell you the latest information as of this morning. Literally, I just got a call this morning. This program is run out of funding, and we do not have additional funding for this program until we get another appropriation from Congress. So I'm going to go through the elements of the program, presuming that we would get another appropriation. But I say all this to the folks on this call so they can monitor their time and effort accordingly. You don't need to go out and do an all-nighter and prepare your disaster loan application. Focus on preparing your disaster loan applications because currently this program is out of funding. But I think it'll be worthwhile for me to just kind of go through the elements, given that if we do get another appropriation, you would know what the program is. Unlike the PPP, 7A, and the other SBA-backed loans, the economic injury disaster loan is issued directly by the SBA. You do not need to go to a third-party financial institution. You go directly to the SBA webpage, online application. I provided the expedited link. A couple of weeks ago, our applications page crashed. This program, I'm just going to take a step back and just talk about this. This program was a very small program of the SBA. I can't tell you how much of the agency's budget went to it, but it was one of the smaller programs that we had. This has probably become the most popular program of the SBA in the last couple of weeks since onslaught of the pandemic. We have never, this program, the EIDL program, along with other disaster loan programs, and the other disaster loan program were loans made to replace damaged physical assets. Given the fact that this pandemic has not caused much physical damage, but has caused much economic damage, that was an economic injury disaster loan. And this loan was devised, this program, along with the other disaster loan program, was designed to address a disaster which was localized or regionalized, such as a hurricane, a tornado, a flood. A pandemic is global, and in the United States, it's in all 50 states and the U.S. territories. So we have had people apply to this program in all 50 states and U.S. territories. Hence, we have run out of money. Hence, our web application crashed within the first week. We put up an expedited application, but as I mentioned, we have run out of funding based on our current appropriation. So, hold off on applying. Let's say hold off on applying right now. So you could use this. You could use this disaster loan for working capital needs. There was an addition to this existing program out of the CARES Act, which was a $10,000 up to $10,000 advance. And the way the loan advance worked is while we were getting getting funding for your larger disbursement of your loan, the SBA would give you a $10,000 advance as soon as they possibly could, up to $10,000 advance. You would get $1,000 credit on the advance for every employee, whether they're full-time or part-time. So this was really designed to give you an advance, give your business advance to pay your employees. And if you used the advance money to pay your employees, then this advance money would be forgiven, hence would become a grant. The interest rates, by the way, as I mentioned, the loan amounts are up to $2 million or were up to $2 million. The interest rates for small businesses was 3.75%. Nonprofits were eligible for this. And I forgot to mention as well that nonprofits are also eligible for PPP. The nonprofits have a lower interest rates of 100 basis points at 2.75%, and the first payment is deferred for the first year. How are we eligible for EIDL? Well, you got to fit within SBA size standards. For the PPP program, and I apologize, folks, I think I missed this in the when I was talking about PPP. We were rounding eligibility for PPP at small businesses that we define basically at 500 employees or less. Now, you could still be eligible for PPP if you fit within SBA size standards in certain industries, and based on your NAICS code, you could have more than 500 employees and still be eligible for PPP. We have a size standard webpage. If you're, if you have more than 500 employees, you could see if you're still eligible according to SBA size standards, but the rule of thumb is about 500 employees. So they're eligible candidates. Other eligible candidates for the EIDL loans are self-employed individuals, sole proprietors, and 1099 contractors. We realize that an increasing amount of our labor force are gig economy workers or self-employed folks. They're sole props, they're 1099s. We wanted to make this program available for them. The PPP program is also available to them as well. Nonprofit organizations, as I mentioned, are available. And nonprofits, irrespective of size, are eligible to receive, or were, I should say, eligible to receive EIDL funding. And this included religious organizations. This was a new update as of, I think, just a couple of days ago, where we added in religious organizations simply because they employ a lot of folks, and we wanted to keep them running during this pandemic. The folks that are not eligible or were not eligible for the Economic Injury Disaster Loan are philanthropic foundations. And these are foundations such as, I'm going to pick on the Gates Foundation, who collected and raised funds for the purposes of making grants. Educational nonprofits. These are nonprofit organizations. They're funded by state and local governments, such as public schools, state, college, universities, and also gambling enterprises who derive more than a third of the gross annual revenue from gambling activities. In addition to both of these big programs that we're primarily utilizing for the economic recovery of COVID-19, we also have a debt relief program coming out of the CARES Act. So if you have an outstanding SBA loan, please go to your lender. The SBA is automatically deferring, not only giving you a deferment on the loan, but is also offering paying 6 months of your loan. That includes principal, interest, and any fees that you have. So this is on the 7A 504 microloans. This is another thing that the SBA has offered. We're offering 6 months of debt relief, where the SBA would cover loan payments for 6 months. The total expense on loan payments 6 months. And this is not only to current borrowers, but this is also new borrowers. So if any of you are in the process of getting an SBA loan, this is available, or were you thinking about getting an SBA loan? This is available to new borrowers who take out loans by September 27th of this year. Bridge loan program. So there are certain loans called SBA Express Loans, and certain lenders make these express loans. These are loans that have express processing time, or loan decisions made within 3 to 5 days. Not all SBA lenders, this is a subset of SBA lenders, so not all SBA lenders are SBA Express lenders. So there's a subset of them, but ask your lending institution if they are an SBA Express lender. If they are, there's a new bridge loan program where they could offer a $25,000 bridge loan with minimal paperwork. The SBA Express loan, the full SBA Express loan, is $350,000. And the processing time, I believe, is 3 to 5 days. But this is supposed to be a faster processing time. There's SBA bridge loan, so that might give you immediate funding. And this could be used as a short gap while you're waiting for your other funding. We understand that a lot of small businesses have limited cash on hand, so we wanted to kind of give them different cash flow options. And in addition to all this, if you have non-SBA loans, I think it would be imperative for me to share this with you. Even if you have non-SBA loans, contact your lender. Federal agencies such as the Federal Reserve, Comptroller of Currency, Indian state agencies that regulate lenders have issued guidance to lenders requesting them to issue loan modifications, loan deferments to small businesses that need them. And these regulatory agencies would not adversely ding these lending institutions for these loan modifications and loan deferrals. Usually that would be the case in normal times, where a lending institution, if they do modify a loan or they do put a loan into deferment, it would be adversely affected by a regulatory agency. So that's why a lot of lenders are averse to doing that. In addition, for the internal business reason, where they're also averse to modifying a loan or deferring loan payments because they're afraid of being dinged by regulators. But the regulators are actually asking lenders for guidance. So if you do have a non-SBA loan with a lender, do talk to them about deferring your loan or modifying your loan, and that would give you that would at least give you some relief of paying a note payment while your cash flow has been disrupted. So with that, I apologize, it was fast. With that, I wanted to leave enough room for questions.
Wonderful. Thank you so much, Nick. We really appreciate your presentation and your time this morning. It's now my pleasure to turn things over to Alex Held, who's a small business manager with BizLaunch, who's going to moderate today's Q&A portion. And again, we'll get to as many of your questions as we are able to. So please continue to enter those into the chat box. Thank you all.
Yeah, thank you, Kate. I really appreciate it. I hope everyone's able to hear me loud and clear. Nick, a lot of the questions that came in were around the PPP and the Idle Loan programs. And I'm going to kind of sum these two questions up because I think they're very important. With the PPP and the Idle, the Post reported today that the PPP is out of funds. And you just mentioned earlier that the Idle program is also out of funds. Now, the question is around, what do you say to individuals who have applied for either or both programs and they have not received a determination? Are they still able to receive funding still? Was there funding earmarked for those applications? Can you tell me your thoughts around that?
You need to get guidance on that, and that's an excellent question, Alex. And in fact, after our morning call, I forgot to ask that question. It just dawned on me like 5 minutes or before this call that I should have asked that. I think it was addressed on the call, and there's going to be an unsatisfactory answer, which I'm going to give you. It is not clear right now, and I hate to give that answer, but that is the most accurate answer that I can give you as of this moment. I will definitely follow up on that, and I would follow up with you, Alex, and you can take that information and communicate that to your audience. But
sure.
That is where we are right now.
Okay, understandable. Now, the other question is around the bridge loan, the Express Bridge Loan program. Is that program still available? Are businesses still able to access those funds?
Based on my knowledge right now, as of April 16th, 2020 at 11:30 a.m., it is available. Okay. Based on the most current information I have right now.
And I can follow up with the audience. We have a list of all the banks in our region who are Express lenders. So if you already have a relationship, I can send that to you as well. But that was kind of a question in my mind. The other question is around unemployment. So where can someone get help for unemployment, and what are options for single member businesses other than loans?
It's an excellent question. Regarding unemployment, that is not handled by my agency. That unemployment programs typically, my familiarity with them, and this is not an official word, but my familiarity with them is they are state programs. They're handled by their state and local governments. So I would inquire with your respective state and local government on unemployment. Based on, based on the public reporting of what I've seen in the CARES Act, I believe there was some language I've seen, which, some language I've seen, which there was some guidance on sole props, single member businesses being able to collect unemployment, but you would really have to go to your state unemployment office to get get that clarification, get that information.
Okay. And I think you kind of answered this, but I think it's worth saying in a different way. One of the attendees mentioned that they've already applied for one of these programs and haven't received a determination. Would they need to apply again, or were they still in the pipeline?
Well, here's what I would say. If they have applied and received an application number, they're in the pipeline. One of the things, one of the most common inquiries that we get is our application in the pipeline? Is it so good? And unfortunately, our old system that we had up and running would actually give you a status update. The new system that we created, which was expedited, does not give you a status update. So I would say that if you have an application number, then you're in the pipeline. If you don't have an application number, you could apply again. And you would probably receive an application number, or you may not. I'm not sure if they've actually shut down the application process, application portal, because the lapse in appropriations. I didn't get a chance to find that out, but as of now, that's the issue of applying again. So the most important thing is if you have an application number, you're in the pipeline. If you don't have an application number, you could go to that URL that I provided. If we get an appropriation, that URL would most likely go live. And if you did not have an application number, do apply again. If you did not have an application number, that new application is streamlined. So, then you would definitely be in the pipeline once you have an application number.
Okay, so it's the application number is the key determinant there. Okay, thank you. The other question is, and this is a very technical question, which I wanted to ask it. Companies are required to certify about economic uncertainty. How does SBA define this? I'm assuming this is with the EIDL program.
Well, certify. If I could, I wish I could. Is there a way we could put that color on? Because I just wanted some clarification on what they meant. Is there an actual checkbox in the application where it says certify? I'm certifying that I'm taking out these loans because of this economic injury. Is that that's the question I have for the caller. I just want to make sure I'm answering the.
Sure, we can come back to that. I think it was. Oh, she just responded back, Sunil. Thank you for that. She said it's on the PPP loan application.
Okay, it's on the PPP loan application. Okay, so is there any way to bring her in, or not really? Is she muted?
Yeah, she's muted. Sunil, could you send me a little chat privately? Just to the group to get a little clarification on that question. I think that would be helpful at the moment.
And what I'll do is while she's doing that, I'll just kind of give you an overview of this PPP applications. The uniform applications we're giving to the banks, and I think I've run through those. I've reviewed those applications quickly. If there's an actual process in there where it says I certify, it wouldn't surprise me. I know I've got inquiries from businesses saying, okay, well, my business operations are fine. I've not really been impacted by COVID-19. Could I still apply for PPP? So I wouldn't be surprised if lenders if the actual application says, yes, I certify, that I'm taking out this loan because my business is impacted by the current pandemic. So if that's the case, if it's a simple checkbox that, hey, I'm checked that business, and if it's accurate, truthful, honest, do say yes. But I tell the businesses that these programs were devised for businesses that have been adversely impacted by the current pandemic. So that's why if they do have a checkbox on there, that's what it is. And if your business is impacted by COVID-19, then absolutely, that's within the SBA definition of adverse economic conditions. Without looking at that, without looking at the application and without specifically looking at what the attendee's asking, it's difficult to answer that particular question with accuracy. But I'm just sort of generalizing the best I could, but to the best of my ability.
Sure. And then another question is, would the SBA release the names of organizations who have already received loans?
I do not know if that's public information or that's going to be public information. That's, yeah, that I do not know. I don't know. I mean, there are two programs here, right? There's two programs, and I'm just speculating, and I'm not, you know, and this is speculation which I'm going to avoid. But there is the Idle program, which is a direct loan from the SBA, and then there is a PPP program, which is really a loan from the bank to the borrower. You know, the loan from the bank to the borrower, I'm not sure. Yeah, again, I don't know if that, I'm just speculating here. I want to avoid speculation. I just got off a call where I'm supposed to avoid speculation. So I don't know. I don't think so. I don't know if it would be public knowledge. Okay. And I don't know if our Idle recipients, if, you know, that would be public information at this point. Okay. Maybe there's a Freedom of Information Act request down the line, and we'll see how that plays out.
Sure. This is another very technical question, but it's from someone that has already received either program. So I've received both the Idle and the PPP. Specifically, I know that 75% of the PPP must be used for payroll. What I don't know is how much flexibility I have to distribute. My understanding is that because I listed 9 employees on my application, I have to have 9 employees during the 8-week period I use the PPP. If I pay all nine for their full hours, it uses almost 100% of the PPP. I prefer to use only the 75% though, and use 25% for other things. Do you have any kind of thoughts around that, this particular question?
First of all, I got to say congratulations to the caller, the attendee, who did receive both loan disbursements, both funds. There are millions of small businesses who are very envious to be in your position. I talk to them all day long, and then sometimes into the wee hours of the night. As far as the guidance on the usage of funds, so the PPP loan was really intended for maintaining your payroll cost. And I understand the loan amount, the disbursement that you received is probably close to 100%. That's why, you know, we had a multiplier of 2.5. The bank probably gave you the loan disbursement that they gave you. My suggestion, you know, is using that money that was for PPP for payroll, because it's earmarked. And if you do reduce your payroll, you would be, you know, based on the guidance that we have and the interim final rule, that if you do reduce your payroll staff or your payroll costs, you would reduce the forgivable loan amount. You would reduce your loan forgiveness portion. So that's my guidance. And if you receive the EIDL loan, the good practice is to use the EIDL loan funds to pay the other expenses. That's good practice. The EIDL funds are not forgivable. They have a long maturity of 30 years and a low interest rate. So the note payments, we want to try to make them as painless as possible. They're deferred as well for the first year. So that's a good thing. Now, if you reduce an EIDL advance of up to 10,000, I think the caller has 9 employees. I'm not sure if they received an EIDL advance, but let's say they received an EIDL advance of up to $9,000 in this caller's case. Then what my suggestion would, then you got to be careful in using the advance funds to pay payroll and for PPP, because if you do use your EIDL advance funds and pay your employees, then what you're going to have to do is for that $9,000 is you're going to automatically refinance that money into your PPP loan. So that would carry over. It would carry over a lower interest rate than your EIDL interest rate, because the PPP interest rate is 1% as opposed to your EIDL interest rate, which is 3.75. I hope that made sense. I hope I didn't confuse everyone with that, but I can clarify that further if needed. But yes, the general guidance, use PPP for payroll costs, use idle if you can for all other costs.
Okay, thank you. Nick, and then the final question, because I know you kind of have a hard stop. It's just a little clarification. So please repeat your answer to the following regarding having an application number.
Mm-hmm.
So if a person's application has been received with no response, and since there is no money, must we reapply for the new pot of money?
I don't believe so. I don't believe so, because even and here's the thing, and you know, again, we're asked to avoid speculation and whatnot, but here's what I'm basing. Whatever, this is to the best of my abilities, and you know, this you know, and here's what I'm basing it on. When our old system crashed because we had overwhelming response to the idle applications, the folks that applied that were in the queue, they were still first in queue. Then we put up our new idle application system, and that was fine. The folks that it was really a first come first serve system, and it continues to stay. And I believe it will continue to be a first come first serve system. You know, and that's just the way that applications are processed. So just because we ran out of appropriation, if you do have an application number, you should be you should be fine. Now there is, you know, nothing, you know, to stop you from reapplying. I don't believe you'll be adversely impacted if you are concerned, you know, but I just want to caution everyone to flood the, I want to be careful what I say here, because I don't want everyone to spend their time and effort in flooding the application system for disbursements which may or may not be there. So if you do, you know, so I am pretty sure that you would not be reapplying, and I hope that helps.
Okay, no, thank you. I think we do have one final question, and we have just a little bit and a couple minutes, so I do want to get it asked. The question is there any guidance surrounding eligibility for companies that have applied to the 8A Business Development Program?
For which program?
For the 8A Business Development Program?
I do know, you know, I do know that there were issues with waivers and whatnot. I was briefly on an 8A call with the business opportunity specialist team. There's actually a weekly dial-in that our office does every Friday for 8A firms, and I'll be happy to send you those details so you could refer all your 8A firms, because I think I wasn't sure if there's a special. I'm pretty sure there's not a special treatment for 8A firms in regards to disaster loans, but there was. I think I heard some sort of program change. I mean, I don't want to speak to something I don't know 100%, but I was on a call. I'm going to defer that question. I'm going to let your attendee. I want to defer that to the 8A call. I'm going to give you the call-in details for the weekly 8A call regarding the disaster relief, and they could ask that question in that call. I think that'll be the best course of action than maybe speak to something I'm not clear on.
Okay, and Sunil, I'm happy to follow up with you after this. Also, feel free to reach out to me too. I'm Alex Held, aheld@arlingtonva.us is the easiest way to get a hold of me. Without further ado, I would, again, Nick, I thank you for participating in this program. You know, there's a lot of challenges going on right now. So I thank you for bringing this information to our community. But without further ado, I would like to turn it over to my colleague and director of BizLaunch, Tara Palacios, who is going to be making some closing remarks.
Okay, folks, I'm going to have to hop off here because I got another webinar to hit. So thank you.
Thank you. Thank you so much, Nick, for joining us.
It was my pleasure.
And hello, oh, yes.
I
Thank
apologize.
you.
Some of the folks, I could not give concrete answers to all the inquiries, but I want to make sure that I'm trying to give. I want to make sure I'm not giving misinformation. Let me put it that way.
Right. That's completely, we understand, and we appreciate you joining us today. And as we hear, with everything with COVID-19 and the pandemic, things have been changing very quickly and very fast. And what we promise to do in economic development and on behalf of Arlington Chamber of Commerce is to make sure that our businesses have the most up-to-date information. I think the challenge with today's webinar is that things are moving really quickly. But I'm also proud and pleased to announce that there may be additional resources for everyone. So definitely stay tuned. Please follow our Arlington Economic Development COVID website. If you look on our main page, we update it frequently, whether it's information from the SBA, information that we've heard about different grants available that will help with either employment or working with contractors, or if you are a 1099. We're still working very closely with the Virginia Employment Center through our own Workforce Investment Board. So there will be opportunities as we move through the pandemic. And I think that things with the federal government will also be changing, and hopefully write your Congress people, because we want to be able to make sure that things are funded. I also want to thank Kate and her team at the Arlington Chamber of Commerce. They also have wonderful information for people available on their website. They've been fast and furious as well, working hard for you, our businesses, to let you know that we do appreciate you all. We want to make sure that we're providing information and resources that are available that can help you and strengthen you as we get through this. One other thing of opportunity or information to share is that we are working closely with our SCORE counselors. So if you need to pivot your business, or if you need to look at different strategies or to redo things during this time, they are still available to you. Most resources and information that we have available are available to you complimentary. There are no charges and no fees. Also take a look at our calendar. We have partnered up with different groups and are promoting different webinars and resources that are available. So with that, I thank you all for your time today and this morning. On behalf of BizLaunch and the Arlington Chamber of Commerce, we thank you for participating. We don't go away after this, so if you have additional questions and additional needs, just let us know. We're here for you, and we thank you for your business, and we look forward to seeing you again soon. Thank you very much.